check, mic check, 1, 2, 3. Good morning, everybody. Happy Tuesday. Happy Q2, everybody. We made it quarter of the way through the year. I have Spencer. I have Steve. I have JC. I have Alfonso. I have you. I have Todd Sohn today. I have Kenny Glick today. I have Jeff Mackey today. A lot going on the morning show today. So we got some monthlies, maybe some quarterly candles. We'll talk about that IPO yesterday. That was interesting. And we'll see where the day takes us. How about that? So drop me a like if you'd be so kind. And let's start this thing.
Oh, we back, baby. We back. Steve Strazza with the tan, with the volume.
Hey, guys. How we doing?
Looking, I like to make fun of you and tell you how bad you look normally, but you're looking pretty good. You're looking pretty good these days. Nice tan, looking good.
A vitamin D. They'll do you miracles. JC's coming down to the Sunshine State. JC's on his way.
Somehow, Strazza keeps playing more golf and somehow gets worse as the more he plays. It's supposed to be the opposite, Steve.
I've already gotten 100 putts in this morning.
Stop it.
Well on my way.
I can't even take him seriously, Spencer. You hear this guy?
No,
I can't even take him
Feels
seriously.
good. It feels good to be standing again, guys. You know?
And then what happens? Like your turtles just watch you putting, just shaking their head in disbelief of how bad a putter what a person can be.
Yep, my turtle can watch me, but also when people come down my street, they can watch me too. I'm like on stage up there because it's the front porch balcony. So I'm getting like hangers, like hanging plants, because I can't have them seeing my stroke, So it's
I don't even know what to say.
Yeah.
A quarter of the year is over. Can you believe it?
Great quarter, guys.
Great quarter, guys. Great quarter, guys. JC, congrats on the quarter. Steve, congrats on the quarter.
Nice quarter, guys. Do they still do that? I used to listen to conference calls 20 years ago, believe it or not. Do they still do that?
Before every question. Great quarter.
Hey, guys, great quarter.
Oh, yeah. Hit it
No matter how bad the quarter is. Hey, guys, great quarter. Stock's down 20% after hours. Great quarter, guys. Anyway, moving right along.
Congrats on the quarter. That's even better.
Congrats on the quarter. Yep, that's right.
I don't know. Why do they do that?
Um,
Why can't they just start out with, wow, what a disastrous quarter. What the fuck happened, Mr. CEO? Like, why can't they do that?
JC?
Just once.
What? Is that not allowed?
No. Are you ready to state the markets? There's so much going on.
I believe I am ready. I'm ready to state the markets.
Yeah, never.
Okay.
JD knows. Never.
Shall we? All right, ladies and gentlemen, this morning we've got the Dow futures down 228 points. That's 0.5% to the downside. Above that 42,000 level that we keep eyeing, that is a big level. S&P 500 futures 5630, slightly above that key level, down 40 basis points. That's 24 handles to the downside. NASDAQ 100 futures actually down the least this morning, believe it or not. That is something we rarely see. 75 points to the downside, 19,360 there for the NASDAQ 100 futures. 30-year bond futures ripping this morning, up over 1%, back above 118.5. Crude oil flat at 71.25. We got copper up 0.2%, 506. We got gold up 0.5%. New all-time highs, 3160. We got silver up 0.5%, 3477. With the VIX slightly higher, just under 23. Believe it or not, over in funny money land. Bitcoin with quite the reversal yesterday. It was really interesting. Stocks were selling off yesterday morning. Crypto was up in the morning, which I thought was interesting. And then stocks ended up coming back. Bitcoin, 84,000, up about 1.7% this morning. Ethereum up 2.4%, 1865. We got the old Solana once again holding that big 120 level successfully. now at 127, up 2% on the day. Total crypto market cap, Mr. Spencer Israel, 2.67 trillion. 2.67 trillion. How are we feeling about this morning's futures?
You know, there was an interesting divergence there yesterday with the Bitcoin. You're right.
I know I pointed it out. Nobody seemed to care.
No, I care. I care.
Didn't you?
Monas
you care now.
Crespi.
You didn't really care then.
Spencer probably knows the Monas Crespi. I'm probably not saying it right, but it's like a boutique analyst shop. They cut MicroStrategy to a sell yesterday. I would love to read that note. Price target 220. That's not a big call. All right. Yeah. So you got to ask yourself, if you're still in the Bitcoin, how hard can you hodl?
Hey,
You know?
now. Hey, now.
How hard can you hodl? If
and then
Solana,
according to Spencer's acronym, formula, it is hodl because you are holding on. It's not hodl because you're not holding on.
I've always
right,
said hodl.
Spencer, according to your nomenclature.
I mean,
Spencer's our English and journalism double major here.
Hodl is like VWAP.
It was a triple major, journalism, English, and religion. Spencer, is that what you were doing?
Yeah, and psychology and sociology.
Nice.
That's right.
Help you deal with us.
Sure.
Oh, tell me more about the Tesla sales, Jack. Not.
Are they still doing that? Are they still even making cars?
Yeah. Yeah. Robots too, though. The robots are really neat. Spencer.
I like how they make the robots to make the cars so they don't have to deal with humans and the unions. I like how they do that.
We're not doing unions today.
No, but isn't it cool how like they make robots to make the cars instead of having to deal with these communist unions? Like, you don't think that's cool? I think that's cool.
Well, wait. Robots have been making cars for quite a long time.
I love how you don't have to pay robots pensions. That's great. I like that.
Steve, what's
Spencer, this question is for you, and specifically for you. JC, you're too bullish.
Too bullish on what?
You're too bullish. If Solana is below everything, if Solana is
too bullish on crude oil, you're the one telling me yesterday you didn't own enough. So now I'm too bullish. You were the one bitching that you didn't have enough oil yesterday on the telephone.
I refuse to define the stock market for you one more time. Spencer, if Solana is below 120, no business owning any crypto, right? You're selling it all. Is it that simple? Is that the?
I don't know if it's that simple. For me, it's Bitcoin below 70. But Bitcoin. I think that if Solana breaks 120, then Bitcoin is probably going to break 70.
How long has Bitcoin kind of been doing its own thing while the rest of the space gets slaughtered, though? Is Bitcoin like any indicator for anything besides Bitcoin anymore? It was the only one working.
Yeah, nah, but if Bitcoin's getting slammed, the others are getting hammered. You're saying more on the way up. If Bitcoin's getting slammed, the others are getting destroyed. You can't say that's not true.
Average drawdown for an altcoin is over 60%.
No, I understand. I'm not saying
All I'm saying is,
so what you're saying is if Bitcoin does well, it doesn't mean the others are going to do well. But if Bitcoin's selling off, the others are getting destroyed.
What I'm saying is how much should we actually even weigh Bitcoin as information for the broader space if Bitcoin's holding up while the average token is down 60%? Maybe that's not what we should be using as our yardstick. Maybe you use something like Solana.
I think it's one measure. I think it's one measure. You know, a lot of these healthcare stocks and energy stocks and even some financials don't care what the S&P 500 is doing. Just like some of these cryptos are not going to care what Bitcoin is doing, right? I think it's like that. Can we talk about Newsmax? Because it's hilarious. I agree with Billy. Wow. Yeah, I was like thinking like from a sentiment standpoint, like this is like peak Republicans. Like there's just too much winning going on over there. And now the IPO, like that's it. Boy, was I wrong. Another 700% on the open. Wow.
So I guess I'm just like dumb to it, but I didn't even realize this was a political thing. When you brought it up yesterday, I'm like, why the hell does he want to talk about this stupid media company IPO? We got the core weave.
They make Fox look like liberals.
Dude, this thing's like
they do.
Yeah, they're like on
7 billion. What's the market cap?
I thought maybe someone said it yesterday, but if they did it when in one ear and out the other. So I apologize if I missed it, but I didn't realize that this offering was 7.5 million shares, which might as well be 0 shares. Frankly,
it was so thin.
Right?
They just pumped it.
7 million shares. That's
Good
nothing.
for them. Good for them.
So if I had known that, honestly, I might have even bought the thing yesterday.
So Fox's market cap is 25 billion, although I understand that's probably not a great comp. Reddit's market cap is 19 billion. What would you compare something like this to? New York Times' market cap is probably shit.
I don't know if you.
So all right,
Throw
maybe
up, if you guys can throw up slide 3.
New York Times looks interesting here.
Has for a while.
That's a setup, huh?
I don't know. So what's the market cap now? It's $10 billion. Is that right? On Newsmax?
10 billion.
I don't know if you can. I don't know. 1 day of data is not. I don't know. I don't know if it's enough to like stay.
Well,
I know that's what it is as of right now.
lifetime.
I know, but
so
like high flying IPO, that number is going to change wildly the next couple of days, right? It's not going to stay.
So the trade is.
My bet is that it will change wildly. Yes.
Yeah. So I don't know.
Here, throw up. All right. So let's see.
Yeah, I wouldn't think
got
too far into this.
So Fox looks great. So I think it was you, Strazza, who told me like Fox dominates everything, like sports, right? Like anything that's Fox, they just crush. Is that still true?
I don't know. Spencer might know
like
more
even
than me.
stuff that has nothing to do with Republicans, they just still do really well.
I'm sorry.
Fox's ratings have always been in another league from
like
their
Fox in general. Like they just crush it. Like even like on the sports side, like they're just on another level.
I don't know about sports per se. Sports, they're probably on par with everybody else. No one is better than the other ones. But from a cable news standpoint, Fox has been in another league for a while. But the hard thing to remember is who owns what, right? So like Fox, the ticker FOX.
Yeah, there's news too, right?
Fox FOX is Fox Sports and it's cable news. It's
what about like Dow Jones?
Like,
that's news.
NWS.
That's News Corp.
News Corp. Got
right.
it.
That's a different business.
Got
entirely,
it. Understood.
Right?
So Wall Street Journal, Barron's,
Market
Dow
Watch.
Jones,
that's all.
Got it. New York Post is also News Corp. And didn't they buy like what's the thing from back in the day? The social media network from back in the day. What's that called?
MySpace.
Didn't they buy MySpace?
No. Doubt it.
I have no. That's
it's
immaterial.
All right.
Not.
All right. Did you have a MySpace? Or are you kids too young for that?
I did have a MySpace,
wow.
but
I did not.
But I could never figure out. How to make how to get like a cool background on it. All my friends had like cooler pages than me. So when Facebook came out and it was ubiquitous and everyone's like the same, I was like, yes, because I couldn't figure out how to make mine look cool. So give me uniformity.
Can you throw up the Reddit? Because I do find it hilarious that Reddit is making new 5-month lows. I just find it so funny.
You won't short that. You won't short that.
I probably won't short it. But I just do think it's funny that there are people out there changing their business models to be more like Reddit, and then they get smacked 60% in your face. Good.
You looking for a trade today? Highs the day from yesterday, right there. Bang.
Highs of the day from yesterday. You buy it for a squeeze higher.
Yep.
You know. I know.
I hear you. I would
prefer. To be honest with you, I would prefer a gap fill, right? Like that late October gap fill, and then squeeze higher. Like that would be perfect. Now the world, it doesn't always work out for me, but I was thinking the same thing, Strazza. Like you and I, we've been hanging out too long together. I'm right there with you.
Because I see a pattern like this, JC. Like it just happened to me with the home builders too, and I don't know which way it's going to go. I don't have a magic 8 ball. But I just want to be involved when it picks a direction, something like this.
So hold on. I like what you said there.
That's nice.
Hold on. I like what you said there. So the trade is if it takes out yesterday's high, that's the trade.
Yeah, you got to be. Yeah, you want to be tight, enter quick, and then get out quick too. Sell a fast double. See ya.
Can we throw up slide 3, please? Because we do have end of quarter data for those who are interested in that sort of thing.
Data on the what?
On the quarterly data.
Good old price data.
Good old price data there, slide 3. You know, I find it really interesting, you know, with all the gloom and doom that's taking place out there. You know, the S&P 500 put up a 23% return last year, 24% the year after that. For the first quarter of 2025, the S&P 500 lost 4.5%. But I find it really interesting that there were really only two sectors that were down. Everything else was flat or up, like everything else. There was only two sectors that were down. That's technology and consumer discretionary, which were down double digits. Meanwhile, China, Africa, Latin America, and Europe were all up double digits. And I was joking yesterday that if Antarctica had stocks, they would probably be up too.
You know, isn't that something though? Two sectors more or less drive like the market. These two sectors, they're down big. Don't get me wrong, but they're dragging the entire index with them.
In America, can you go slide 7, please? Because I really do find this to be so interesting and so hilarious. It's really, really a fascinating thing here. The S&P 500 suffers its largest quarterly underperformance relative to the rest of the world since 1988. Largest underperformance by the S&P 500 since 1988. That was this quarter. Spencer, if you will, can you put up the next slide to remind everybody what the geniuses over at The Economist magazine were telling you just the quarter prior?
We had a couple of these, like super bullish America covers, a lot of them.
This was in fourth quarter. So in the first quarter, it was the largest underperformance compared to the rest of the world ever. The US dollar got absolutely destroyed. That was this quarter. Last quarter, what's great about The Economist is that they're not just journalists, right? As much as we want to fade the journalist community, when you have journalists parading around as economists, you get the double whammy, right? You get the double whammy there. So you got the journalists parading around as economists telling your parents that the dollar in America is the envy of the world. Holy shit, it's turned out to be the exact opposite. Can you throw up slide 11, please, Mr. Spencer? Just to remind everybody, these geniuses came out with this magazine cover after 15 years of massive outperformance from the United States, and then the U.S. was the envy of the world. As it turned out, it was the exact opposite.
And it's great. You can actually see it now that the quarter has closed. Good for Bar Chart for getting on that quickly.
Oh, that was Bloomberg. That was Bloomberg.
If you pull up the quarterly chart, even in any of these, JC, IFA did have a big quarter in the early 2000s, but VGK SPY, for example, you'll see it. Just do a 3-month chart or quarterly candlestick chart. Pull up a little rate of change. 16.25% VGK SPY. Even if you look at something like Germany, EWG SPY, best quarter ever. So you can see right on the MSCI ETFs themselves. You know what's interesting? I don't really ever look at quarterly charts. It's just way too zoomed out, mostly for us. But RSI,
I'm going to mix some in tonight.
RSI 14 on these quarterly international ratio charts, JC, it's been in oversold territory since 2017.
On a relative basis?
Yeah, like IFA SPY, oversold since early 18. Crazy.
Those are pretty slow moving. Spencer, so tonight we have our live monthly charts strategy session for premium members of All Star Charts. This is the cheat code, guys. I swear to God, it really is. If there's any cheat code in the market, it's the multiple time frames. It's zooming out. You know, you hear whenever in doubt, zoom out. Monthly candles are so underrated. You know, one of the things that I love about it, Spencer, just drop the link in the chat, guys. If you don't have the invite for tonight, we get going at 8 p.m. Eastern time. And, you know, the ability to see, that's fundamental analysts don't have this. They can't analyze markets on multiple time frames. So that sucks for them. But that's not our problem. Fortunately for us, we can analyze things on multiple time frames, and looking at monthly and even quarterly data, not only does it help us identify the direction of the primary trend, it gives us no choice. It forces us to recognize the direction of the primary trend. So it really is a life hack to overcome your own, you know, biases of, dude, what the market do today? Fucking Reddit, you know, the Newsmax of 700%, Kenny with the faux show, bro, and the lady said this, and the Trump, and blah, blah, blah. Like, it's easy to get lost. So once a month, just take a step back. Pour yourself a glass of wine, crack open a brewski, whatever you're into, lemonade, whatever. Sit back with some music on. You know what I'm saying?
Anyway. JC, are you worried about small caps?
Are you asking me if I am spending any of my time thinking and worrying about the smallest, least important companies in the world? Is that what you're asking?
That's right. That's right.
No, they are the least, smallest, and least important companies on Earth for a reason, right?
You don't own any small caps. You're not DCAing into small caps.
Small caps. Is MicroStrategy a small cap? No, right? Not anymore. Is MicroStrategy a small cap? No. Used to be.
It's been a while.
Yeah. I'm more of a mid cap kind of guy. You know what I'm saying? Proving that you're not completely useless. Like you're now a mid cap. Like I prefer that.
Can we throw up the small caps 200? Shout out to round numbers. See a round number these days. It's important. You got IWM dealing with 200. All of the semiconductor indexes like XSD, SMH, big level at 200. The SOX 200. And then the home builders, ITB, XHB, dealing with 100. That's like the breakdown level. It's like the neckline of these massive tops, 100, 200. And 200 in the Russell 2000. I was joking with Alfonso last night. We've been talking about this level, 2000 in the index, the Russell 2000 index. We've been talking about this level for like 5 years now. Literally 200, 200, 200. Been writing about it.
It's literally right in the middle of a sideways mess. I mean, we talked about it yesterday. Trannies and small caps, they look exactly the same. It's in the middle of this massive mess.
So the smallest,
we even played a game. Like, what do you call this? You don't remember?
So the smallest, worst stocks, like you said, that you don't own, had completed a trend reversal, and we're in a new uptrend. And then all of a sudden, that got ruined, and they're getting slammed back into the box, undoing all that progress. You can now no longer say that the path of least resistance is higher for some of the riskiest stocks in the market. Not bullish. That's all.
I mean, this is what it looks like to me. It looks like a hot mess. Like such a hot mess. Like the hottest of messes. Like, one day when I finish my technical analysis book and it gets published, there's going to be a chapter called The Hot Mess. And it's going to be this. It's going to be like emerging markets in like the 15s, 16s. Like there's just hot messes out there in history. What a hot mess.
Yeah. You know what else was bad about yesterday? How good was yesterday? If you could rate the bounce, how good was it? Big red to green reversal day. People are really excited.
I'm too old. I'm too old to get fooled by these end of month, end of quarter shenanigans. These scumbags on Wall Street with their dressing of windows. Like I can't anymore with these guys. So I try not to overthink days like yesterday. The shenanigans I'm talking about. You know how they do.
The biggest reason I was unimpressed.
I want to talk to Todd Sohn about these kind of shenanigans. Seriously, go ahead. Sorry.
Yeah, a lot of end of month shenanigans. Can we throw up the XLK and SPLV relative chart? This actually happened.
Let's throw this up and then we'll bring in Kenny.
So this happened yesterday. On yesterday's, red to green rally, big reversal day. Some of the most offensive stocks in the market completed a massive top with a decisive breakdown. That's tech stocks relative to the S&P 500 up there in black, completing a top. And then low volatility stocks relative to the broader market complete this beautiful rounding bottom reversal. Now, suggesting that we see more leadership in the future from the most defensive, most risk-off stocks. So that happened during your big rally yesterday.
During my big rally?
Yeah.
Now it's my big rally.
Yeah.
Was it that big of a rally?
You loved it?
Did I love it?
Mm-hmm.
I mean, I love the crude oil doing that. That's one for the team.
Catch up. We talked about the catch up. Throw a little mustard on that thing. Yeah.
Mm-hmm. I did want to bring in Kenny. I wanted to bring in Kenny. Let's bring in Kenny. I want to get to this, and I got some questions for Mr. Todd Sohn afterwards. What do you say?
Let's do it.
It's been a long time coming. They ain't come for my clock, they tuck it. Putting up numbers, 99 problems, and I still kept it 100. Hold up. Yeah.
Oh, Mr. Kenny Glick in the house. Dude, you have more college gear than Bill Cosby. You know that? Are we allowed to say that? Is he back or no? Still canceled.
I don't know. That's not the only time I've been compared to Bill
Fun
Cosby.
fact
What
for you
happened?
young kids, Bill Cosby used to rock like all kinds of colleges. Like every college in the country was represented at one point. Not every college,
Yes.
but like a lot of college was represented at some point in that show's career. Did you know that?
No, I remember they had the colorful sweaters. I got a couple of those somewhere back in my basement.
Mr. Kenny Glick, so you nailed that faux show bro yesterday. Isn't it nice when it's just math?
Oh, it's not only math. The Fat Finger Freddy showed up also telling us where the market was going to go. Which was
explain to me what a fat-fingered Freddy is for those who are unfamiliar.
Yeah, take a look at the charts. Boom. See it? No, you don't see it. Anyway, how about that Newsmax, by the way? But we'll get to that story in a second. Fat Finger Freddy. Again, whether or not you believe we're living in the Matrix, I am in the Matrix. I am the Matrix. At around 8, I think it was around 8:37, there was an out of money print on the QQQ right there. And I said, aha, there it is. The market's going there. We see it. It used to only happen once in a while, but since the flash crash, and I think they implemented some more, algorithms, every once in a while, the market tells you where it's going to go. So after it was confirmed, of course, by VWAP down here, the faux show bro, there's your VWAP. And yesterday was so eerily connected to the Newsmax IPO. At around 10:50, when the Newsmax IPO came out, we were also confirming that this market was about to start going back to this bad print. So here we are. So again, we sat there all day. The prior day VWAP was our first target, but I said, hey, don't sell yet. I said at around 3:30, the market's going to try to shake you out one last time, and then we're going to rip to the bad print. So there's the 3:30 shakeout, and then there's the print that we were waiting for all day. So basically, we stayed long the queues the whole day, but most of the time we were just very, 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 very glued to the Newsmax IPO.
Well, hold on. Before I want to get into the Newsmax, but I'm really, really interested in the Fat Fingered Freddy.
Fat Finger Freddy. Okay, so I've been again when I started trading, it was tape reading. Well, all we did was we had access to level 2s for the first time. All we looked at was volume, market makers. We tried to follow the market maker, follow the money, and we would sows in and select net out. If you guys know what I'm talking about, so we used to look for glitches, and there was a lot of glitches back when sows and select net and Instanet was out there, and we exploited all the glitches. And every once in a while, you would see an out of the money print, and lo and behold, the stock would go there. 30 years later, it's starting to happen more often than not. So yesterday, when we saw this out of the money print, that was one of those moments. Hey, should we take this serious? Yeah, take it serious, because now the market is telling us, because again, I know some people, I was battling somebody. I'm starting to think the market's pre-programmed, not just days, maybe weeks in advance. So all the news is just noise, and it's always been noise to me, but now it's being confirmed. So there's a print there, and we see it quite often, and we saw it on NVIDIA. I'll show it to you on NVIDIA. There was a fat finger print there, and that was one of our targets. We almost got there, but again, when you see these out of money prints, it's kind of the say, okay, we've got some orders that we need to get done. Let's get this stock to go there. And it happens now more often than not, which is kind of spooky. It is kind of spooky. And yesterday, that was a great, great trade on the Qs. But again, confirmed by VWAP, of course. And it was really, really eerily connected to the Newsmax IPO. 10:50 a.m., the Newsmax IPO came out. We also pivoted off the VWAP, and next thing you know, we're long the Qs, we're long Newsmax.
Throw it up. Throw up the Newsmax.
And welcome back to 1999, my friends. Yes, may every IPO be like this. Give us 7 million shares in the float. You know, one guy's probably got all 7 million. There's about 500,000 shares out there. And as soon as it got halted, I said, uh-oh, here we go. As long as it gets halted to the upside, you want to stay with this. And what I've learned from basically back in the day, tape reading and just learning market mechanics from my mentors back in the 90s and the early 2000s, is if it gets halted and holds the halt low print, stay in the stock. And we just kept doing it. And it kept getting halted. And it never broke the halt low candle. and it just gave us permission to hang in there. So right back to 1999, 15 gets you 20. If you get into the 20s, you're going into the 30s. You get to the 30s, you're generally going to 50. 50 gets you 80. 80 gets you 120. And look where the stock went this morning, all the way up to about 128 so far. So when, again, all the kids on the When Moon and all the bullshit that they post on the internet, the stock just went 10x. And now they're talking about it going to the moon. Come on, people. The thing just went 10x. But this is the best IPO, and the fun part about it was relatively easy to understand. There's only 7 million shares out there. Everybody wants some. It's not a short squeeze. It's just supply and demand, kids. It's just supply and demand. Everybody wants.
Well, it's not so much a short squeeze, but you can argue that it is a squeeze because there's so little supply, right?
Right. And I mean, there was a moment where I said, you know what? Let's go see if you can even short this thing. So I got to borrow on it, and it cost $187 for 1,000 shares just to get the borrow. And the idea that you could short it yesterday, and remember, shorting IPOs back in the day was illegal. You couldn't even short it. There was no, unless you had set up something called a bullet, but I'm not going to get into that. There was ways to do it. But the idea that you could short this yesterday kind of said, oh, you know what? People are going to try to get in front of this thing. It's definitely going to at least $80. And wow, I mean, we really did milk it. Some of the guys, I mean, I just played the little meat in the middle, 30 to 50, but some of our members held on the whole way and held it overnight. Congratulations to them. And right now it's just a VWAP break. And, again, you got your faux show, bro, in the pre-market over VWAP. There's not a lot of volume on it, but if this thing breaks 128, you're probably going to 150. So it's unbelievable. And yesterday there was a moment where it did stabilize and it stopped acting, getting halted. And you consolidated it between 50 and 58. And then we just bought the breakout, just like any other tech stock. 1999 is back, baby. And it's fantastic. So cue the music. I don't know. What was the number one song in 99? I don't know. Prince?
The number one song in 1999. It's a good question.
I don't know, but we've been living 1982 lately. Let's get physical. Because I don't know if you guys were around in 1982 to 2000. When we want to make America great again, I want to live 82 to 2000. Those were the best days. I had hair and everything was fantastic.
The number one song on year end was Believe by Cher.
1999? Wow. Really?
So,
all right.
At year end.
I always liked Cher.
Followed by No Scrubs, which is a banger.
Nice.
All right. Kenny.
So, by the way, also the
Kenny
Melgo.
Glick.
Hope you guys had some fun with that. I still don't know what this one is, nor do I care. It's just on fire every day.
Chinese software. They definitely do that. They're definitely not lying to you.
Right. I think it's split 2,000 times already. So
they're definitely telling you the whole truth and nothing but the truth about what they're doing and not doing, for sure.
Yeah, just absolutely. I mean, like I said, I've said this before. This is the most reminiscent to the 90s, late 90s trading that I've ever seen. And you know what? Let's live this day over and over again. Yesterday was an epic day. Intraday reversals everywhere. Dow Jones showing strength early. It was phenomenal. Let's just live that day over and over again. Cheers, my friend.
Kenny's living it in his room. Hit thebait.com, guys. Join the party. See you, Kenny. Man, the most like 99. Okay. That's quite the statement. Let's see if we get more action today. All right, let's bring on Todd Sohn here. He's in the house and send over a few charts as well. We'll talk ETFs. We'll talk flows. I want to talk about these single stock leveraged ETFs as well because they're going crazy. So,
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Todd.
Yo.
Hey, now. What's up?
So you tried to think of an April Fool's joke to do live?
I was getting ready this morning. Yeah. I'm like, it's April 1st. I think I'm seeing Steve today. I tried to think of something good. Nothing.
Come on, you're better than that. You're usually a pretty crafty guy. You can be funny.
Nope.
Tesla is acquiring MicroStrategy, all outstanding shares.
Yeah.
For $300.
That's not bad. You gave me a second worth of
Todd, what are you seeing in terms of, are you tracking the flows to all these crazy things? There's a whole like cottage industry that's grown around just this one stock, MicroStrategy, and now this intelligent yield, whatever.
Slide 16, please. Slide 16,
Yeah.
please.
So what is going on? Because these things, they're liquid. They're quite liquid. A lot of them.
People love them. First of
do.
all, their usage rate is climbing by the day. So you think about like when Jimmy Butler was on the Heat, right, Steve?
Yeah.
He was the go-to guy every game. He was points, rebounds, assists, right? His usage rate, his player efficiency rating was highly elevated. I think that's what's going on with some of these single stocks where they're not a huge part of the ETF universe, but the amount of volume they're doing is quickly climbing up the ladder, especially for Tesla, Nvidia, and sometimes MicroStrategy. So my only problem though is, do we really need 9 Tesla-related ETFs, right? How do I know which one to pick? How do I know which one I want to go with? And so that's my issue here. Like, why do we have 9 different levered Tesla ETFs and 5 different Tesla option income ETFs? It's kind of crazy to me, right?
And how long have they all been around? Like, does somebody eventually win? We don't really have the data yet.
They've been around for 3 years almost. I think August 2022 is the first one.
Wow.
And the 2 big players are Direction, right? And Direction's been around for years in terms of the levered space, and then Granite Shares.
Yeah.
Granite Shares has NVDL. That kind of is the one that made their whole firm kind of float water here.
And it's interesting too, Todd. Already, a lot of these have survived a pretty rough bear cycle.
Yeah, they're still seeing inflows. Look at TSLL. That's the Tesla one. Right? Tesla's been cut in half, and it's still seeing money go into the fund. So there's this buy the dip mentality for these. They're
right.
They're like a drug almost in a way, where people just want a hit of it, whether it's working or not. So I mean, these things are going to survive unless the bear market continues and they get really wiped out.
I mean, MSTZ came out. Is that the biggest MicroStrategy levered short? Do you know?
MSTZ on the inverse side, I believe so. I don't know if there's other ones.
This thing came out. It went from 500 to 10 in like 3 months, from September to November. It didn't go anywhere.
Yeah.
Like, it's still here.
It's a timing vehicle, MSTZ, right? The inverse stuff.
Yeah.
But or if there's option on them, you can do some pretty unique things with the options on these, right?
Yeah.
And that is so like these things are not made for everybody. They clearly serve a purpose for kind of home run bets, but they'll survive.
How many of them have inverse? They don't all have inverse.
Not all of them.
Not many.
Tesla, Nvidia, MicroStrategy, Coinbase. I want to say Palantir might, and then after that it gets real thin. As you can see, like on this chart, most of them only have one levered long. What they're basically doing is taking a paint gun and just hitting a wall and see what sticks. Because not every stock is going to work. I don't need 2x Pfizer, which was one of the original ones, and then it closed. Nobody needs that.
Yeah, that's ridiculous. Nobody wants that.
You just want the cold stocks.
Yeah, you want juice on the juice. That's because
exactly.
The types of people who are looking for these want the highest beta vehicle they could find. You don't want to give them a blue chip low vol like Pfizer.
That's why there's no staples, utilities, real estate. There's no products from that sector. And then in healthcare, you have Lilly, Moderna, and Hims and Hers.
Exxon is interesting.
So Exxon is an income play though. That's an option income where you're selling.
Oh, okay. It's covered calls.
I want to say, but there is a 2x coming soon, I think.
There's a 2x Rocket Lab. Am I reading that right? Does that say RKLB?
Yeah. Dude, there's Rocket Labs. There is the quantum names now. Rigetti Spaghetti. And then
they got a double Rigetti.
Yeah, and
I don't have to buy the calls anymore.
IONQ, which is IONX now if you're levering.
Oh gosh.
So listen, now the problem with these, those are super high beta. They could blow up any day.
Right. Listen, I think people are going to have a lot of fun with these while they last, and I think a lot of them will. Like the Nvidias and the Teslas, they're probably not going anywhere, right, Todd? That's why everybody else is pouring into this market.
The left side of this, I think, will stay.
Yep.
The right side, a lot of those will come and go.
Yep.
Like, I don't know, I'm looking at this. Disney, do I need 2x Disney? Not really. Or if it's an income play, not really.
We got Chinese online retailers in here. I mean,
yeah. So what's interesting is the BABA. There's a couple of BABA ones out there now. You're seeing Crane Shares, who's the China issuer. They're also launching levered BABA, Baidu, and some of those.
Oh, so they're just now getting into the single stock game.
Yeah. So the Granite Shares has BABX. $100 million in it, launched December 2022. I'm looking at it right now. Crane Shares is saying, okay, well, if that can get 100, maybe we can get 200, right? We have the inroads. From what I understand from talking to some of these issuers, Asian investors love the leverage play. Mm-hmm. So do U.S. investors to an extent, but it's really big in Asia. So if Crane Shares has inroads into that market, then it makes sense.
One of the big things we learned just being in Asia for a month and talking to people is they actually, on balance, have a much higher risk tolerance. They're used to a higher risk, higher reward game, right? They're used to trading more volatile markets. So to them, there's a bit more of a gambling mentality for sure.
Yeah, I don't know why. It's just a cultural thing, right? Which is interesting to me.
It's because they're used to volatile markets that boom and crash, and that's what they have. They're trading their local markets a lot of times, especially if you're talking about the smaller Asian.
So now they're going to trade. They'll trade overnight here, right? Because there's I don't know what time is it in Asia now, 10 o'clock at night, something like that.
Yeah, it's about 12 hours apart. This is wild. I think this is great. So, are you tracking like differences in flows between the longs versus shorts in the big names?
So I have there's a chart. I don't know if you guys have it. There was a chart in that pack, not necessarily the flows, but the assets.
Okay.
In levered long versus inverse ETFs, and I just take the ratio of them because that tells you basically the direction of the market. It was up to about 12-1 in favor of levered longs. Yeah, there we go. At the start of the year, you had about 130 billion in levered long assets. 10 or 11 in inverse ETF assets. Now, this is a newish data set. Like the leverage stuff's been around for 17, 18 years, but it only got really big since COVID. People discovered leverage, right? Trading from their homes.
What if you,
So it got up to 12-1 though, as part of a bull market effect. And that's the highest I have in this data set. It just tells me that things were a little bit extreme. So now you're finally starting to mean revert here a little bit.
Todd, if you were to overlay the price of these funds, because these lines represent the assets under management of the long funds versus the inverse funds. If you were to overlay price, right? So the price of the long fund, some sort of average index of it, would this indicator lead, lag, confirm? Like, what's the information here?
I think it's a sentiment message.
Okay.
Because if you have levered longs rising so rapid like that, you're in a bull market. But also keep in mind things might be getting a little bit out of hand. And there were definitely breadcrumbs of that heading into this year.
Yeah.
So, and this is, again, I use assets because it's a combination of the flows and the appreciation of how some of these things go. Like when NVIDIA starts going on a tear, of course, people are going to buy into 2x NVIDIA.
Yep.
So I look at that bottom panel kind of as a sentiment, as part of the whole package of sentiment data.
What's shocking to me is when that ratio is sort of, I guess I don't want to say bottomed, but when the two lines converge the closest, which is what, halfway through what gets Q3 of 22, there was we were in a raging epic bear market for stocks and bonds and everything, and still there was more levered longs than there were levered
should always
I guess that's partially like a function of the U.S. markets, which there's a couple of exceptions where they mostly go up 70%, they go up 70% of the time. So it makes sense to me that assets will be higher there. But I just look at when you get that ratio back down to 2-1, 3-1, that, okay, maybe a correction is really starting to run its course. It's a new input
3-1
to some of the data we're using. What's that?
Then we got a ways to go.
I think we got a ways to go. Maybe I'm wrong. I would feel much better about things, seeing this back down into the low single digits. 12 to 1 to 7 to 1 is a good clip. But hey, why can't we get a little bit more going?
All right. Enough on this. We were just talking this morning. I don't know if you heard. Best quarter ever in terms of rotation into ex-US equity markets. In terms of performance. What are you seeing from a fund flow perspective? Is your data confirming the price action? Because this quarter was big. You called a momentum thrust in favor of international stocks.
The data and anecdotal conversations. So I was traveling. I was in Atlanta and Vegas recently, and every conversation I had was about international.
Yeah.
They all want to know, what's the deal with international? Is this for real? So what I found interesting was earlier in the year, flows to say Europe were kind of anemic. There was no interest there. It was a really low bar, and then all of a sudden Europe starts to work, and it's really working. There's very minimal amount of tech there, 7-8%, even though SAP is the largest name in the index. Wow. And now all of a sudden now you're starting to see models at it, right? So I look at the State Street models, they added a 3% position to SPEU. That's some inflows there too, and everyone follows along with that. And all of a sudden, by the end of the quarter, Europe on this chart here is the third largest inflows behind cash and gold. So the price action is bullish, right? You look at the longer term picture that we all know about. I'm just a little concerned that people are getting a little over their skis and performance chasing in the near term.
Yeah. And you know what? That could make sense too, because you got some massive price patterns here that could take some time to resolve. Some big levels in play in Europe.
Yeah. Like it was a huge move. So I'm okay with a retest, like what we would call a tag back to some of the support levels.
Yeah, because look at where they came from, right? They made it a long way. A lot of them are running right into big polarity zones or big resistance. You look at a chart like Germany, like the EWG, it's like a financial crisis base. A lot of those MSCI ETFs look that way right now.
Yeah, I'm a fan. I like it as a diversifier, especially after the concentration risk that I think is finally going away from the U.S. market.
Yeah.
And you get some industrials, you get some financials. I like the insurance names in Europe. It's been really good. Yeah. So I really do think it makes sense here. I'm a little less convinced on Japan. I want it to work, but that's going through some post-yen unwind growing pains.
Is it normal to see Japan and China kind of move together? I can't help but see them stacked right on top of each other here in the chart.
Yeah, I think it's a coincidence. Yeah, honestly. So here's what what's weird about the China part. The first China rally back in the fall.
Yeah,
there was a massive amount of money chasing it, or maybe it was short covering. Who knows what it was?
And the flows were huge then, right?
Yeah,
yeah. Okay.
So then the second attempt, though, there hasn't been as much interest. So I don't know what's going on with that. It's very confusing.
So we had the flows on the fall rally, right? And then everything cooled. We corrected for a couple of months, and then we surged again, and not seeing the same kind of.
It's not as many bites this time around.
Interesting. Is that concerning?
No, I don't think it's concerning. I think it's more just like people are skeptical.
Okay.
Right?
So it sounds like from what you're telling me that this international trade maybe is on course, but will require patience.
Yeah, I just think it makes sense to be an international to some extent, right? Maybe not the whole portfolio, but have it involved for the first time in a long time.
Yeah.
Oh no, go ahead.
Europe's up here with gold and treasuries. Is this like defense rotation into Europe?
I think it's diversification and momentum. The gold thing is strange too, because gold was doing no flows because I think they're all going to stocks, they're going to crypto, they're going to cash, and then all of a sudden you have to get the 5,000 year high, and models start adding it, and retail starts buying gold. Both gold and Europe kind of in the flow picture was kind of working in tandem, where it was being ignored, and then once late February, March hits, all of a sudden everyone just piles in.
And there's got to be, at least to some degree, an element of, well, if it's finally coming out of tech, then that's a lot of money, and it's got to go somewhere, right?
Yeah.
And Europe at a certain point is kind of cheap and forgotten, and why not? What's the downside? Some of these markets are trading at like low double-digit PE multiples. They've been sideways or haven't done well, underperformed for 10, 15 years. Why not park some money there while U.S.
Totally. I think it makes sense. And tech, so much money went into tech from 2022 or post Chat GBT launch, right?
Yep.
Until late last year, and the tech stocks peaked what 9 months ago relative to the S&P. Semis have been in a bear market. Now there's finally some acknowledgement that it's not working. So some of that tech money, I could see it going to, it could go to Europe. Maybe it's not earmarked for that, but it could go to stuff like staples and energy. More defensive if you're playing tactically here in the U.S. That makes a lot of sense to me.
Did tech just now flip to like net outflow?
Yeah, it's recent.
First
very, very recent. You're finally starting to see tech flows finally ebbing.
So it's easy to look at these charts and say, wow, look at how much semiconductors are already off. But it's also easy to look at them and say, semiconductors, all these indexes, NVIDIA, they're completing massive tops and the fund flows are just turning negative. In other words, there could be a lot more selling.
Yeah, that's entirely possible. It's hard to know how much more and how much more downside, but they're not great. They're not great. So it's entirely possible you start to get some folks waking up today and be like, oh, tech had a bad quarter, we should sell it.
It's really hard to bet against big tech. My whole career, this has just been a losing trade to try to bet against these stocks.
If you think about, like, I don't know, it's undoing a habit and a routine for the last 10 or so years.
Todd, you hear this? You hear this, man? You hear this, man? How old are you, Todd? How old are you?
38.
You're 38? You seem so much more mature than me.
Mature?
Well, that's
what happens. 5 years younger.
That's what happens in this office. We just grow.
So much more mature. I love hearing Strazza talk about how my whole career, I've had trouble betting against tech. When did your career start, Strazza?
3 years ago.
Don't young guy me, okay? Because I'm
not young guying you. It's just you started right when tech started outperforming, correct? What year?
Fine. A lot of relative trends had just begun.
Year? See how he's dodging the question?
I started paying attention right around the financial crisis, 07, 08. That's what got me interested. I was in college.
I mean, there's a lot of them like that, Todd.
I think that's it's a really interesting thought that a large generation, younger generation, we grew up on tech stocks, right? I can't think of.
They don't know. Like this whole gold going up. Like the kids, they don't know nothing about that.
Gold, if energy starts to work.
Energy, if ever gets going.
We're
trained, environment.
We're trained to be open-minded. We have studied, the history of these trends, and we know that they'll eventually shift and turn. But I think the point that Todd was trying to make that I agree with is that a lot of people, if they get used to a playbook working for 10, 15 years, they think it works forever. They might not know how the trends shift throughout history, right? So that takes a long time to unwind. JC, you've seen it. I was at the Money Show a few years back. I had it was a tremendous discourse. But I was speaking with a gentleman during my presentation who was convinced that you just had to buy the cues. And if you were doing anything else, it was absolutely crazy. And it was hard for me to argue with him because the data supported what he was saying. That's been the situation. So you're going to have to retrain people's brains to get out of this.
By the top of the cues now. QBIG, just buy that.
You buy some triple Qs inverse cover calls.
QBIG is literally just the Mag 7 plus Broadcom.
You got to send me your secret levered products package because I've been dabbling. I've been really getting involved. Ooh. Yep.
There's more coming. You can get Mara and
that we know.
I didn't know there was a Mara. We need a Mara inverse is what we really need.
There's a Mara something. I know that. I don't remember if it was levered or if it was an option income play.
Spencer, can you throw up slide 5 again just to this is important, Todd, we joke about bull markets, bear markets, doesn't even matter. Buy what's working, don't buy what's not. Like I know. But just from a cycle standpoint, do you think it's fair to suggest that this is a bear market? After a 23% return last year for the S&P, 24% the year before that. S&P's fall 4.5% in Q1, but only 2 sectors were down, and China, Latin America, Africa, and Europe are all up double digits. Does that sound like a bear market to you, or does that sound like rotation out of American growth?
I like that you put Africa in there.
You liked how I did the
So,
Africa,
yeah,
you
yeah,
know.
yeah.
I'm
Why
an
not?
equal opportunist. I feel like
It's-
Africa doesn't get the love it deserves. Double-digit
did
returns
Egypt-
better
we-
than your shitty S&P 500.
We did Egypt
It's-
last week, Todd. You got to tune in.
Yeah, we
I
talked
do.
about
I
Egypt.
do.
We talked about the Philippine peso. You want to get down? We can get down.
I
We go everywhere.
I jump in here when you have when John Colovos is on, so I can make fun of him.
He's awesome.
It is a bear market to me in passive growth tilted indices. How about that?
So it sucks to buy
tech-
American growth.
well,
You're just saying it
so-
nicer.
Tech
most
heavy,
funds,
tech
most
heavy
indexes.
growth. Yeah, there's a lot of issues there. They're all overweight the same 10 stocks,
Todd,
and that's
did you
why
just
XLK's down.
And
Did
how
you
much
just say it's a
energy
bear-
do they
it's a-
own, Toddy?
He's saying it's a bear market for most
It's-
stocks, is what he's
Big
saying.
zero-
No, he's not saying that. You're
Yeah, he
putting
is. That's
words
what
in
I'm
his
hearing.
mouth. Can you throw up slide 15, please?
Big zero.
Yeah,
They
he's
don't
not.
own
You're putting words in his mouth. Stop doing that to him. He doesn't deserve that. He's a good guy. Stop doing that to him. Throw up 15, please. Todd, so what you're telling
What's
me
it?
is that all these schmendricks
I'm-
out there own too much American growth and they don't own any of this one? Is that what you're
Exactly.
telling me?
And the flow data backs it up too. They don't own energy, and listen, rightfully so. But now you have to reverse that wiring in your head to buy it, and that takes a
Kids
long
these
time.
days, they don't know. They don't know about energy bull markets, Todd. They don't know.
This chart is really intriguing to me because it's been opportunity cost for 3 years, for 10, 20 years, but it's super timely and it's starting to percolate.
Do you do you get down with some quarterly candles, or is that too much for you?
It's a little much for me, but I understand it. I know that's your thing.
Quarterly candle chart, not bad.
Not bad. I can work with it. I'm more of a monthly and weekly. A quarterly.
I'm with you. I'm more of a monthly, but 4 times a year, I can get down with some quarterlies. There's a time and a place.
What if you just looked at your charts 4 times a year? That's it. That's how you should do your process.
For most people, that's probably not the worst idea.
95% of people, that's fine.
Yeah. The monthlies, the quarterlies are a little aggressive, especially when you're looking at quarterly charts of Newsmax. That's not going to be very helpful.
I was down at the NYSE yesterday, and they had the huge banner up there celebrating Newsmax. If you're down with that,
700%. Didn't see that coming.
I had no idea it was IPOing, and then all of a sudden I see the little alerts pop up. I'm waiting for it to go back into the. It'll end up in the IPO ETF, which has been desolate in terms of new stuff.
How long does it take? How long does it take to get in there?
I forget, honestly. They changed the rules a few years ago where they extended the names that were in there from 2 years to 3 years. So they're not even IPOs at that point, and that the fund was getting stale because there's no IPOs.
Hold on. Speaking of rules, I meant to ask you when we were conversing about the single stock stuff. When are they going to change the rules and allow triples? Because Italy and some of these European countries, they have triples. We only have doubles.
Oh, what, the leverage?
3x. I want 3x.
So 3x is basically banned in the US now. They changed that in 2020. You can only go up to 2x unless it's a exchange traded note, when you can go up to whatever you want. There's a 4x S&P, but it's a note. It's a dead instrument rather than ETF. So anything above 2 is basically banned in the US. In Europe, though, you can do whatever you want in Europe. You can get 3x cocoa or 3x coffee.
What could go wrong?
What could go wrong? So not coming back here unless
why not?
SEC changes the rule. The SEC's got to change the rules because it's dangerous. Yeah, I don't know.
But they just fired that guy. They're changing all sorts of things. I think we should try for a triple.
Todd, best Q1 has come and gone. We've got it was energy, the best performer, coming in at almost 10% for Q1. Healthcare number 2, 6.5%. Then you got Utes,
finally,
staples, real estate, then financials, materials. Those were the leaders.
Very defensive.
You could probably think about Q2.
Q2,
what's going to be the biggest winner? Q2.
I still like energy. I really like healthcare. They've really been testing my patience. I mean, I could make the case for mean reverting in terms of tech for Q2 only, though.
I like that
because some of that's like a little
oversold. For the remaining 3 quarters of the year, you're going to stick with energy and healthcare.
Yeah, I like the setups.
I like where your head is at. Just
Um,
own the biggest underperformers and disappointments over the last several years. Just
See,
own
I
them.
think it's a mean reversion year to me. I feel like that kind of adds up.
Yeah, I'm totally with you. I wish I
just a-
disagreed, but I'm totally with you.
Oh no, that's never good.
I mean, I'm with you. I mean, what do you? I mean, I brought out the quarterly charts. I'm bringing in the big guns.
Todd, what
Yeah.
kind of flows did we see into the energy funds in 2020, late 2020, 2021?
Big.
So we
Yeah,
need to
all
see
in.
more from those
And-
flows
and-
to confirm a breakout in XLE. Right? Throw up the XLE chart. Right.
Yeah,
For this thing to break out.
2020, it was money into XLE, it was money into tips, commodity, anything
Right.
inflation sensitive. And it's a much different story today.
I'll tell you though, guys, that tips chart right now, looking good. As good as any. I'm not a bond guy, but
You just got to know your duration on those tips funds because they're all over the place. There's some short duration, longer duration.
In this
just keep in
case,
mind
it's
that.
not just the tip. There's a lot more. There's a lot more behind it. Todd, last question. You go with your family down to Disney. You
Disney
understand that
guy.
racket. You know why I'm long.
Big
How do
Disney.
you feel? The biggest bomb of all movies since Dumbo. Have you seen Snow White yet? Have you gone?
No, I passed on that one. I'm a
passed on it.
I'm a Marvel Star Wars guy.
I have a 4-year-old daughter. We went to see it. It was all right.
No, see, I got boys. I'm not taking my boys to see Snow White.
No, that's probably a good idea. The dwarves weren't even that funny. I thought the dwarves would be funnier. They're all right.
What's that?
When's your next trip?
I have nothing scheduled right now, to be honest with you. Amazingly, I was there in December.
I know.
Are you going to this thing on the 14th in the city?
Nope.
No, I'm going to be away. I'm going to be away.
Should I go? Everybody keeps telling me, "Oh, you're going." I didn't even know what was going on.
I was supposed to speak, but they changed the date on me, and I'm going to be on spring break with my kids.
Nobody asked me to speak.
We
Where
should
you
do
going
our
for
own event.
spring? Where you going for spring break? Cancun.
San Antonio.
Nice.
San Antonio.
Changing it up.
What the hell's in San Antonio?
I don't
I
know,
wanna talk
barbecue.
about
Just do something different. The Alamo, why not?
I heard the Alamo's very small.
There's no basement in the Alamo.
There's no basement in the Alamo. That's a bummer.
Yeah. Do I think it's bottom? I think it's bottom, man. Long few years for that stock.
Disney?
Yeah.
And then you think, considering all the bad news, you'd think that it'd be getting sold off harder. It's not.
Yeah, no, it's doing its thing. It's big bottom, and they got a beautiful
Let me
new
ask this about
headquarters in the city,
political
by the way.
squeezes. What do you think has more potential? The libs getting owned by Tesla, or the conservatives getting ripped in the Disney? The conservatives are really crushing this Disney and the actress and the whole thing and the
They don't
woke.
like it, and they're
They don't like
pivoting
it at
now.
all.
He watches news. He watches a lot of Newsmax, Todd.
Me? I thought it was
Sounds
a
like it.
magazine. I swear to God, I thought it was a magazine.
Okay.
I didn't
I don't
realize
know
it
how you know all
was a
this.
TV network.
The management team at Disney is finally playing ball with the administration. I think they realize, like, okay, we can't do this anymore. It's not.
So who's more vulnerable, the libs or the conservatives? The libs on the Tesla or the conservatives on the Disney? Which one can get
There's
squeezed more?
such different stocks, though.
They are. That's true.
One is Colt high beta, and the other one's a entertainment company,
like mega cap blue chip,
which goes in. Yeah, like you won't. They're just completely different. It's a good
that's
question.
fair.
Hard. I can't answer. It's so hard. It's too hard to answer for me, honestly.
You got to go with the beta.
Yeah, I think the beta would.
What has more upside? The higher beta one.
Mathematically speaking, it would have to be Tesla, right? Because it's just super high beta.
Yep. All right.
But
you like where my head is at on the squeeze situation?
I do. I think that's interesting. But in terms of just long, drawn out bases, the Disney chart is the one that is also interesting to me.
Because it's not a top formation, is how I look at it. I love not a tops.
Is anything ever a top? I don't know.
Yes, they actually are.
I don't know if anything's ever a top.
Well, look again. There's plenty of them. I'll show you. Mr. Todd Sohn, ladies and gentlemen, fan favorite around here. We love it when you drop by.
My
Cocktails
pleasure.
in the city soon. I'll see if I can. Oh, you're not even in town, so I'm probably not going either.
Don't go.
All right. See you later, Todd.
All right, and he's gone.
Todd Sohn. How about that? What a legend.
He's great. He's got his ETF charts are tremendous.
No, I know. I mean, when it comes to the ETF analysis, I mean, he is, and he's good at it, obviously, but he loves it. Like, he's just so into it. Like, it's just like, for him, it's like a hobby, right? So like, and that comes across. Like, obviously, he's like on point when it comes to all this stuff, but it's what he does. It's great.
Yeah, it's awesome. Strazza said he had something to say before we brought Jeff on, but then I don't know where he went. So
Strazza, you coming on to
Hold on.
yeah.
So, there is no Trump trade.
Trump trade?
There's no Trump trade.
At the moment, no.
The DJT?
Anything that was a Trump trade back in November and December crashed and burned. These have been the messiest, worst corners of the market. Anything. So stay away. The other thing that's important, because there's something in the chat, and a lot of people are saying this right now. The president of the United States, I just ran up my stairs. The president of the United States does not want to tank interest rates. This isn't some master plan where Trump's trying to tank the market and Scott Bessent, they're all just like playing 3D chess with the markets. Like,
which one's the Scott Bessent? Which one is he?
Never,
is he a lawyer?
ever would a president want to crash the stock market. Okay, so this isn't some sort of like master plan that they're executing at all. And the reason why interest rates are falling right now is simply because investors are fleeing into defensive assets. Throw back up the performance chart. That's the same reason why treasuries are going up and rates are falling. This isn't some master presidential plan playing out.
He's a Secretary of Treasury, JC.
Oh, yeah? Secretary of the Treasury?
Yep.
That's
Am I
cool. It's
right?
not Hank Paulson anymore?
Definitely not.
I like Hank Paulson. He was cool.
We're gonna talk about retail stocks. I got questions.
Can we bring on Mr. Jeff Mackey, please? Because what better time than the present to bring on somebody to tell us about the consumer?
Yeah. I don't know if Jeff is looking at PVH today, but they're having themselves quite the freaking morning, up 18%. Yeah, Philip Van Houston. All right, we got Jeff.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Mr. Jeff Mackey. Good morning, sir.
Hey, buddy, how you doing? I was just looking at PVH. I just made up a little chart. I was going to send that over to you guys. How you guys doing?
Oh.
And then excuse my ignorance, and I feel so ignorant even asking this question. Philip Van Houston.
What is PVH? Yes, Philip Van Houston. They make dress shirts. They make
dress shirts.
Tommy
that was what I was
Hilfiger
gonna ask.
and Calvin
For men?
Klein.
Dress shirts for men?
Sure. But they also make they're Calvin Klein. They are the and Tommy Hilfiger.
Oh,
So,
really? Oh,
Yeah.
know those.
And so it's been a huge short. I'm writing a column today talking about just kind of rules for a bear market. Spence, I just sent you the graph of PVH. Yeah, this is a
Hold
good
on, stop right
example.
there. Can we just talk about how old Jeff Mackey is? That he just called it a column. I'm writing a column.
I'm writing a piece. I put it on tape.
I'm writing a column.
I put it on the
These days
VHS.
don't know what a column is. The column. I feel like
I
this
don't
is like a
wanna
bougie
know.
word to say, Jeff. Like, you're a man of the people. Here you are talking about the columns that you're writing. No?
I'm an
Why am
old
I the
man
only
of the
one?
people, JC. It's I don't know, blurb. It's I don't know what you guys call them. A tweet, a snap.
We don't call them blog posts anymore?
No.
I don't know. I'm just trying to stay on fleek with the kids.
Oh, I see what you did there. I don't think they say that anymore.
I don't think they do either. See, that was an example. That's why old people shouldn't use young people terms, and so I'm perfectly fine. Yes, I just wrote a column on my typewriter, and I just pulled it out and I faxed it in. I sent it in on the Mojo, and Spencer should be getting it shortly. There's PVH
I don't want to know
right
where
there.
you get these images from.
Yeah, where do you get these images? Like, what weird website do you subscribe to?
That's Mark Wahlberg.
Wait a minute. Is it really?
Pop star.
Yeah.
Yes, it is. What
Oh,
do you
my
think? I
bad.
drew that myself. Come on.
Didn't
little
recognize
culture,
him.
man. He did
That's
fantastic.
on Jeff
Calvin Klein
Mackey's
ads.
wall. He's got the poster on his wall.
Honest to God, I went to the website last night, the Calvin website. They're still running the exact same ads, only now it's the kid from The Bear And like Diplo, same kind of naked aesthetic, same black and white, same look, we have abs, same shitty company, which is really the point here to bring it back full loop. This, they kind of went into that report, shoulda, coulda, woulda. It seemed like a short setup. The stock's been a disaster. They have horrible exposure. They took down numbers. They guided everything lower, and the stock is absolutely screaming. The point being, bear markets, you don't just flip over the bull strategies and just do everything dyslexic style. They're different animals. They trade in kind of a crueler, nastier way. I talk about it a lot in the column. And really, these kind of tapes, especially for the consumer, it was down 11 something percent, worst sector of the year in the XLY. It's people see a chart like PVH and they want to short. They want to become kind of okay, now I just short things. And you get in for a skull hammering. Fear and greed are not the same exact emotion, and so you don't have the same behaviors on some of these charts. That's why you get these vicious, snapping, horrible reversals in negative tapes. They typically get unwound. As far as I'm concerned, for the most part, it's in a bear market. Most people lose money. Like bear markets, jobs are kind of to take everyone's money. In a bull market, everyone except the pigs kind of cashes in. You can buy dips and you can go away. Bear markets are full-time jobs. And this is not, we got a lot of tariff experts all of a sudden. We got a lot of people who are all kind of smart about shorting everything. You know what? Stick to your knitting and kind of just control your own risk in yourself. And that's one of the bigger strategies of getting through a tape like this. It's a messy, ugly tape, man. I don't know about you, JC. I think we both spend the weekends at the end of the quarter going through charts and going through sort of, let's review, let's take stock of what's going on. A kind of unpleasant week. I wrote about again today. Target kind of just took me back. I haven't owned shares of Target for years, and I just got sad. I was just looking at that, just thinking, "Holy crap, we're at like 8-year lows." There's no hope in sight. It's bleak. It's not a long. It's not a short. It's just sad. And this was really just kind of a bummer of a quarter. We'll be back. We'll be fine. But controlling that anxiety and that emotion for most traders is going to be the way they get out of this alive, and maybe even with little cash. It's not a time for hero ball. It's not a time to kind of step up and teach yourself to be a bear. It's a time to do your homework.
Jeff, we were having a great conversation yesterday, and I really want you to share these thoughts with the folks if you don't mind. But my question that I asked you was, we've been bullish oil and it's working, and we're looking to buy more and looking to buy more energy stocks, and like that's just where our head is at. And when I think about the consumer, it's kind of one of those things where like, yeah, great, oil rips, we're going to make a lot of money, that's fantastic for us. And then other people get mad when we make money, we get like some pushback sometimes, like, oh, you guys are taking advantage and other people have to spend more money, right? So great, we're making a lot of money, and other people get impacted negatively because of higher energy prices. So I'm told. You have a different opinion on that. How do you feel that higher energy prices, how does that impact the consumer? How do you view that?
I kind of view it the other way around. Who's spending money on all the oil other than just a currency ripper, other than just something that is related to the financing of it rather than the actual demand side of the equation? It's why is energy going higher if the consumer's going to die? Why does every company keep telling me that, demand is really not all that horrible? Why are people cruising in the numbers they're cruising, JC? To talk about the cruise industry, all three of those companies, the biggies, and four if you count everyone involved, but Carnival comes out, they should be low-end consumers. They should see the bleed. It's not happening. People are still paying. And so we have this conundrum where everyone's expecting
Carnival's a low-end consumer?
It's a lower end of that group. They sell the cruises that are more for everybody. You can spend pretty much as much money as you want to on a cruise. They get
cruises
kind
are
of pricey.
expensive.
Yeah, I was pricing one out for the summer, man. And let me tell you something, cruising isn't cheap. And boy, they're not offering you a lot of bargains. They're not like, oh, people are worried about tariffs, so why don't you take a cruise with your family for free, Mr. Mackey? That was not my conversation with the cruise companies over the last couple of weeks. They're gouging you, they're hammering you, they're doing things like they would in a good economy. Returning to the point on energy, again, unless this is just a straight up, the dollar shit, it's going to take more of them to buy everything type of play, which is kind of a different aspect. But without demand, if you slow down the entire economy, the global earth slows down. And if you slow down the US consumers the way that people are whining about they think is going to happen, you're taking a lot of demand out of there. And I don't know where all that's going to go. If no one's flying and no one's driving and the economy is shut down, how long does your energy rally last? Probably not forever, or just the dollar goes to zero, in which case we have bigger problems to begin with.
Jeff, you are a native Minnesotan. Is that what someone from Minnesota is called? A Minnesotan?
Yes, that is the exotic term that we refer to.
That is the exotic term. So you are a native
yes.
Minnesotan. And I was we were texting one another when the guy, what's his name? What's the guy's name? The guy dancing with the Tesla, how he gets his rocks off when Tesla stock goes down. What's his name?
Oh, Tim Walz. Yeah.
Tim
Walz.
Right?
Yes. Not
so
my
Tim
governor.
Walz. So as somebody, your governor. So as somebody who is a keen observer of consumer stocks, Tesla being one of them, of course, a native Minnesotan, a keen observer of markets and investor psychology. At the time, you were with me that perhaps the low for Tesla had been seen. We got some upside, we got a pullback, kind of dancing around. You still think that that the lows in Tesla are in, and the
I think it was a hell of a trade, and I think it's fast. I think you got to be fast in this tape. It's a bear market tape. I think we had a great trade on that. We added it to the model. Got to start somewhere portfolio put together, and the roundup, and then
is Tesla
it's workforce. Yeah, Tesla's in there. It's a who buys a stuff. Come on, it's a car company. Anything facing the consumer, baby. But it's people are vandalizing cars in the street. That is classic kind of that level of Schadenfreude, man. That's a peak. That is the reverse equivalent
buy it.
of. And that's your shoe shine boy giving you stock tips at the top, man. That is
my nanny
dancing on stage, calling out the number.
Yeah, she's a big liberal, and she asked me the other day randomly. She's like, "Is Tesla stock still going down?" Like that.
Right. Like we should be.
Like she's a cafeteria lady, and now she's my nanny asking me about Tesla stock. So I mean, we got to be close. Sweetheart,
we got to be
sweetheart,
close.
but just what it is.
For sure, for a trade, that company is doing a lot of things. But again, it's that shorting's not that easy. If Tim Walz is up there making short calls, and that's what it amounts to, if he tells you, "Oh, I got this little stock app, and it goes down every day, and what a thrill it is to watch that," you're at least trade adjacent there. And man, if people are that's the dance in the end zone, JC. That's the guy who's getting just a little too smug for his talent ability, talking about his shortened. Every day I open my little stock thing and I just get this adrenaline rush. It's like, holy shit!
Holy shit! Like this company employs a lot of. I mean, how many people in Minnesota does that company employ? Like a lot, right?
Who knows? I mean, why would any representative of the United States government be cheering for a company that's not breaking any major federal, they're not Enron. It's like, what are you so excited about there, man? You're freaking Minnesota's invested in that company is why you should give a crap about it. They own shares in it. So, the icky shuffle up there in front of people who, if they're invested at all.
Look at you with the call.
You got me started, man. You got me talking in old timey terms. I'm going to go to my mid-Atlantic accent. See, it's be a fly on the wall and a bug in the works here pretty soon. That's the kind of price action you see. That's going to be an incremental bottom in Tesla. In terms of the fundamentals of that company, I don't even want to get involved in that snake pit. There are people more qualified than me. But in terms of an emotional trade, holy crap! It's if people are getting that excited over the short side, that is precisely when you want to be on the other side of that trade. And I don't care.
No doubt.
Or a Democrat. However I feel about the guy.
Jeff, okay, so you think that's a little extreme there. What about on the more conservative side, something like Disney? They're really ripping Disney hard with the girl and the Snow White, and you think we're close there too?
That's a lot's going on with Disney. You get to unpack them. That's one of those good conglomerates, right? They're cruise business, man. They can't buy boats fast enough, JC. They love it. They're a cruise business. Their parks.
I heard they're awesome, actually. The Disney cruises, I heard they're really good.
I've heard that as well, and I mean that just sounds like I'd rather be on a freaking prison ship, man. That's
No, your kids are older. Your kids are
I'm
older, bro. They're
110. I'm a
42,
grouchy
bro.
old man. No, I know. But I love Disney. I've given my money to Disney. I've opened the wallet and admired the way that they just vacuum every available piece of green out of your wallet, and you feel okay about that. You leave and you're
Yep.
like, you know what? Special memories. That's good. That's a good trade. That's why
Cut
we
the
made the
line,
cash
pay
in the
more.
first place.
$12 hot dogs, $50 fucking balloons on your way out. It's a racket they got going on there.
And it's a gorgeous racket, And again, if the economy is so bad, then how the hell is that such a really good working racket right now? I don't know what's going on in their movie business. Yeah, it's part of what made me so sad about Target. Disney is another go woke, go broke. The level of vitriol on all that side. I just don't think they know how to tell a story anymore, and that's a real problem for them as a going concern. Less, they still print money. It's they managed to not go straight to zero when the superhero thing ended as well. Disney's all about just kind of creating and recreating that culture, but they've got huger macro issues when it comes to making movies in general now. All that's going to change because of AI. All that's going to change in terms of scripting, streaming. Those businesses are all being reevaluated. And like a lot of other things during the shutdown, what was kind of awesome are all the streaming services you could get for like $5. But it turns out, that it costs a bunch more to do that. Iger's not that fired up on being there, so I'm not sure how that business plays out. But it's from the sentiment side of things. The anger that we saw towards those companies and the wokeness and the backlash they're seeing now, that is the inverse of what we saw with Walls and Tesla. You always want to be on the other side of anything that becomes just that culturally obvious and that sort of load.
Yep. I mean, it's what we do is we observe and try to extract profits from those vulnerabilities. Spencer, do you want to drop the link? I know you guys are doing a little dance talking about the consumer later today. Spencer,
yeah, 1:00 Eastern. Jeff and I are going to go live and just kind of shoot the shit for a little bit. So it'll be on our channel. It'll be on our site, stockmarkettv.com.
Yep.
We'll see you guys there.
And we're going to talk about just stuff, Jason. It's not my first rodeo on these sell-offs. I started Round of Money right before the dot-com boom. And, so got to learn about the bust. I was on national TV every single night during the great financial crisis. That was weird. Seen these things before. There are kind of rules and methods that'll get you through this, control your anxiety, and keep people kind of mellow. What I hate seeing on tape like this are folks swinging for the fences and just making a lot of dumb mistakes. That the panic and the greed are what kill you. It's not, it's the decisions you make without any kind of foundation that really vaporize the capital, and that's where the market is right now. It's a tough tape. We're gonna get people through it. We're gonna talk about it today, right, Spence?
That's right. 1:00 Eastern time. We'll see you there. Thanks, Jeff.
Yep.
Thank you, Jeff. Adios, my friend.
All right, let's do some recess.
Talk about a lineup of guests today. Can I just tell you?
Well, we didn't even get to let's just see. I mean, we talked about Newsmax, PVH. We talked about what other headlines are there this morning? Actually, that's kind of it. My screen is loading for me. What do we have that's moving today? IAC is getting hit pretty hard, down 15%. Nothing else jumps out or jumps off the screen as being super interesting.
We got some Fed talk. Semis are weak again this morning.
CoreWeave up 6%.
Talking about tariffs. Chinese trade minister is making comments on the trade war. So is our Secretary of Trade. PMI came in slightly above expectations.
CoreWeave having a good day. 7%. All right. Let's do
slow news day.
Yeah, let's do recess and get out of here. JC, you're going out of town later on in the week, so I'll mention this now. We're going to Philadelphia for this weekend, Friday to Sunday, for our little baby moon situation. I haven't been to Philadelphia in like 8 years. My wife has never been to Philadelphia in her life. So what should we do? Where should we go? Where should we eat? Chat. JC, go.
Well, Mama's Pizzeria is actually shutting down officially. So Mama's Pizzeria is a cheesesteak joint that doesn't serve pizza. And they're shutting down probably because of bad marketing, because they're called Mama's Pizzeria and they don't even sell fucking pizza. But nevertheless, the cheesesteaks are amazing. And if you can catch that before it closes, that'd be great. I think you don't have any kids yet, so it'd be a little creepy. You go into the aquarium without any kids, but the aquarium is pretty cool.
I go to the aquarium.
It's not in Philly though. It's in Camden, which is right there.
Okay, yeah. I think it was there when I was a kid. Mama's is closing next year, so I have time.
Oh, so you have time. Okay, that's good news. So I have time to go back too. Mama's Pizzeria, fantastic. Philly, huh? You know, the spot, the Four Seasons is really nice. They do a really nice job there, get a nice sensual massage. And I like
I didn't know that people went to Philadelphia for the spas.
Morgan and I, we go because like we'll go to a concert or something or like a basketball game and we'll like get there early in the day and like do the spa and then go out, you know?
Mm-hmm.
Yeah, no, it's a thing. It's nice. Yeah, it's cool.
Yeah.
That's all I got.
I have nothing. I got nothing for your sponsor.
Oh, you know, I got a good spot. There's a steakhouse called Barclays, and it's right on Rittenhouse Square.
Okay.
Yep, they've got this Brazilian sommelier who's really, really good. And Barclays.
Are you busting balls right now?
Am I breaking balls?
Now we're talking.
Why am I? What do you mean?
A steakhouse named Barclays, really?
Yeah. I think it's called Barclays Prime. Philadelphia. Why?
Oh wait, is that like Charles Barkley?
Charles Barkley. It's not Charles Barkley. It's Barclays like the bank Barclays.
Barclays. Okay.
Barclays. Yeah, Barclays. It's right in Rittenhouse.
Okay.
I like Philly. I like Philly. A lot of Philly sucks, but you don't have to go to those areas that suck. You can just go to the nice parts. Like, you know, that's how I look at it. But yeah, steaks at Barclays. Highly recommend.
All right, good deal.
I got so this one is from my career. I show magazine covers that were like before my time. This is one of my personal favorites of my career. And then here we go. The Economist magazine. This is July, end of July 2020. Free money when the government spending knows no limits, right? And it's a machine that's literally printing money. And what really got me was the French horn. Notice the French horn there, which is spitting out the dollar bills. I thought that was very creative there by the journalist parading around as economists. I thought that was really good. So if you go to Spencer, if you go to slide 2,
wait,
I remember.
Well, first off, there's nothing inaccurate about that cover. The government was bazooking the money. Yeah.
So my tweet at the time in early August of 2020 was, after 39 years, could it be this simple? Did the Economist just signal a historic bottom in rates? I mean, it's literally a machine that prints money on their magazine cover. What did it for me was the giant French horn that shoots out the new bills. I thought this was creative. And so that was my tweet at the time. So it's not like I'm cherry picking here. And then if you want to throw up slide 5 there, what interest rates did immediately after that magazine cover was that they went straight up, never looked back.
That's a good one.
Straight up, never looked back from that, like that second double bottom there on those 2020 lows. And if you want to zoom in on the magazine, actually put that on the deck. The French horn really did it for me. I mean, it still gets me. So this one actually from my career. So nice little souvenir there from the bottom in rates. That was a good one.
You know, a lot of the best ones are currency related.
Well, that's interest rates related. I guess printing money, but that's
monetary
more of like
policy related. Yeah.
They nailed that though. I mean, the French horn. I mean, a French horn spitting out dollar bills. Come on.
That's a good one.
Yeah, it's a good one.
Roblox is moving on rumors right now. I just saw something in the chat. The move is fading, but it's a rumor that they're announcing a deal, a partnership, an ad deal with Google.
Great. Roblox, man.
The chart looks fantastic. I don't understand it. I don't know what it is. I know it's a kid's game.
Roblox is the money that they're paying, right? Isn't it like Roblox? Like Robux? Like
Robux is the currency. Roblox is the platform. You'll find out in a few years, Jason.
I hope not. I really, I hope not.
You'll find. Give it like 3 or 4 or 5 years, JC. You'll be all over that. Roblox and Disney. All right, cool. That's what we got today. Thanks for watching. Thank you, Jeff. Thank you, Kenny. Thank you, Todd. We'll be back tomorrow with Brian Juan, 1 o'clock today, Eastern Time. Jeff and myself going live. Spaces in an hour. Steve and Patrick. And that's what we got. So thanks for watching. Conference call tonight. The link is in chat. If you are a member of AAC Premium, you got emails about it. If you're not a member of AAC Premium, join AAC Premium to get access to the call. 8 o'clock.
Special call quarterly charts edition. So
man, what a party. The monthlies only happen 12 times a year. The quarterlies 4 times a year. That is today. Woo!
And it was a great quarter, guys.
Great quarter, guys. Great quarter.
Isn't it a great quarter? Thanks for watching.
Adios. YOLO responsibly.
I can't take no loss. I don't even know what it costs.